The market is volatile, the stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.
Welcome to another episode of the First Fruit Stock Club. Man. That's right, we're back again. We have an updated time because my son has decided he wants me to coach him in basketball. I'll get into that. All right, today's show, we're going to discuss a few things. First thing is we're going to discuss the rate cut and how it will affect your brokerage account. All right, that's the first thing. All right. We're also going to talk about. All right. We're also going to get into Nvida, my GEVernova Trade. Okay, I'm going to show you guys the power of options. Man, I was successful on this trade. And I'm going to show you some trades that I'm waiting on, right? Got some trades that's taking a little bit long, but, you win some and we're losing some for now, but we have time. So I'm going to go into that. But also, guys, you got to stay to the end. And I'm going to tell you about, if you listen to Jerome Powell today, you probably didn't because, Fed talk is not the most interesting talk. But, man, he gave a secret message, all right, about where the market is going next year. So you gotta stay to the end of the show for me to reveal this. This is something you should know that you should put in your arsenal in investing in a brokerage account. All right, so look, first let me just start off quickly with disclaimer. Information provided by the First Fruits Stock Club podcast is for educational and informational purposes only and should not be considered financial investment tax advice. Investing in stocks and other securities carries risk. First Fruits Club and its affiliates do not guarantee any specific outcomes or returns. By listening to this podcast, you acknowledge that you are responsible for your own investment decisions. All right, so look, guys, as investors, right, it's real important that we protect our inputs, right? Our inputs. And our inputs is what we see and what we hear, right? Online, it's a lot of trash online. It's a lot of trash on TV. Music can be trash also. Man, investing is about making sound decisions with a clear mind, right? Sound decisions with a clear mind, right? So sometimes I know, look, I love hip hop, I love my gangster shows. I love Power, right? A Game of Thrones fan. I'm into all that. But we have to, if we want to really be investors, we have to clear our mind. We have to have focus, right? So I'm just going to say for every negative show that might have, the shows are good though, right? They have a lot of action, a lot of get your emotions, real into the show. And because of that, they may have a lot of negative situations in the show to get you emotionally involved in the show. But for everyone of getting your emotions involved, you need to have something positive, right? So you need not just to consume negative things or things that get your emotions affected, right? All right, that's with everything. Social media, we need to consume positive things, right? So with positive inputs, we can have positive outputs. All right. So that's my little speech for today. All right, so let's move forward, okay? So today, man, and please like, subscribe, share, everything. Please like, subscribe, share for the show. I'm trying to grow I'm growing. Man, I'm finally growing. After all this, I'm finally growing my subs. I'm trying to get my subs up there. Look, please share it. Let everybody it's a sound information that you can do. All right, so look, let's get to the main topic. Will the rate cut move the market? As we saw, the rate cut did move the market today, right? It did move the market today. They decided to cut 25 basis points. Basis points is based on 1%. Okay. So 25 basis points is 0.25% of 1%. Okay. All right. So look, so let's work out how this works, how this really works in real life. So let's say a bank has assets of $100, right? And the Treasury has assets of $100 in Treasury notes, right? Treasury bills, and then $50 in reserves. So what happens is that the Federal Reserve is deciding to put money back into the economy. This is how they put money back into the economy. They go out and buy treasuries from the banks, right? They buy these treasuries from the banks, right? So what happens after they buy the treasuries, the bank assets go down, which are treasuries, and the bank's reserves go up. So after the Fed buys $20 in reserves, treasuries go to $80 and reserves will move up to $70, right? What happens next? So therefore, banks would then have all this money in reserves and they don't want to hold this money. They have to do something with the money. So what do they do with the money? They begin lending the money out to the public, okay? So the banks will lend out to businesses, lend out to households, right? Lend out to and individuals, right? Of course, businesses and households. The bank will begin to lend these things out, and what that does is that will stimulate the economy again, right? Right? Businesses have projects. Not only that, it's refinancing. Some short term debt, and what they're doing is they're buying short term securities, right? 1 to 3 month treasury notes. So 1 to 3 months, and so what's going to happen is when we look at the curve, right? We look at the interest rate curve. So basically, what it's going to do on the short end of the curve, it's going to bring the short end down, and it's going to increase long-term rates, which that's how it should be, because when you borrow for a long amount of time, that's more risk, right, of paying back. All right. So who this will affect, if you have car notes, I don't think it will affect mortgages if you have a fixed note, because of the rate was so small. But any short term debt will be affected. Credit cards, some of your credit card statement may get lowered. All right, so that is the process. You need to know this process of the Federal Reserve and what happens when. So basically, what we're basically getting the stimuli, the stimulation is coming back to the economy, right? And so that is always positive for stocks, right? More money, more individuals have more money. Guess what? Spend more money, right? More businesses have more money. Guess what? They can hire more people, right? It's a whole process that moves on. You need to learn the process. Simple, right? The Federal Reserve says, hey, look, we want to put more money into the economy. We go into the economy by buying securities in the open market. They buy the securities, right? And then when they buy, that cash goes into the banks as reserves. All right. So that's good for you to know. All right. So, man, some more other news. New stocks in the S&P. Carvana, man. Carvana has gone, and I meant to include the chart, but I left the chart out. Carvana, I think at a low of 2023, $7. I think they closed at like 400, and I mean, it's just crazy. One of the ultimate returns of stocks, right? Let's see, Carvana. It closed at $467.67. And in 2023, it was trading at a low of $7. $7. Let me tell you, one of the reasons I remember reading, one of the reasons is the owner holds a lot of stock in this company, right? He holds a lot of stock in this company. Um, and what they did is they just had their investor relations, and they've decided to buy back stocks. And when companies buy back stock, it becomes a boom. Sometimes, but majority of the time is they're just removing the excess stock off the market, right? So therefore, you don't have to do anything. You just hold the stock, and the value of your stock goes up because look, there's less stock on the market for people to buy. All right. So it says Carvana is an e-commerce platform for buying cars. The net margin is almost double, right? So the industry average is maybe 2% net margins, which is a small margin, but that's the margin of this industry, right? So it went up from 2% to like 4.7%, right? And it's two times the industry average. It gained market share against its competitor, CarMax. You're real familiar with CarMax. CarMax is number one, but they're gaining share. And they said 30% of buyers now complete the buying process online, and the selling process. 60% of sellers do the 60. Because a lot of times people have a bad, I think car dealerships have a bad rep of when you coming in there. Sometimes you can feel like you're not going to get the best deal. And sometimes people don't want to go. People decide, look, I'd rather just do everything online. You can give me all the information online and we don't have to haggle. We don't have to negotiate. It is what it is. And that's what it is. So we'll see how this one pans out. But man, I think that Carvana is really on to something here. I mean, they've been added in the S&P 500. So that's really important. So one thing you should know that what does that mean when a stock is added to the S&P 500? The S&P 500 is a list of the 500 largest companies in the United States, right? 500 largest companies in the world, basically. All right. So how do you get listed at in the S&P 500? Oh, all right. So man, I missed the slide. So what happens is for you to get listed, there are certain criteria. You have to have meet a certain revenue criteria, a certain profit margin criteria, and once you meet that, you will be added into the S&P 500, right? And the larger the company is, and the larger profits, the larger percentage you'll have in the S&P 500. And you know, this is why the S&P, I say, this is my opinion, that leaving your child an index, right? Index fund in a brokerage account is really taking care of, that saying, you should take care of your kids and kids, for generational wealth. You know, owning a ETF, S&P 500 ETF, is a great way to pass down wealth to your kid. I'll tell you why. Because what happens is they have that criteria, and if companies don't meet the criteria, they'll remove them out and add new companies in. And they're always, as you see, they added Carvana. They're always taking companies out, adding new companies in, right? And what that does is that keeps the ETF or the S&P 500 ETF growing, right? And keeps it sound, takes those ugly companies out that aren't performing, because what happens is over time, companies lose their competitive edge. Companies come in. I remember reading how maybe like maybe 1990, it was the number one company in the S&P 500, the largest company was like IBM, I think. And we see now it's between Nvidia and Apple, and companies move in and move out, and what we want that, right? Because we always want to have the best companies in the world, right? And that's why you don't have to do much. You just have to buy a share of the S&P 500. I like VOO, right? It's a great stock, but also there's a NASDAQ version of technology, and that's the QQQ. All right, two I love. All right, will there be a Santa Claus rally, right? The Santa Claus rally refers to a recurring historical pattern where broad equities margins often measured by indexes like the S&P 500 tend to rise the last 5 trading days of December plus the first 2 trading days of the new year. They said that it's positive during the last 7 days, and this happens 79% of the time, right? So we have maybe 2 weeks for the last week. So this is a good time, and just think about all the things that happen. And I've been discussing this, so you'll see the communication change, right? For everything is kind of aligning what I thought. So look, they cut interest rates, which was like a 90% chance that they were going to, right? And so more money into the system. The banks will have more money, start lending out more money. People will be more positive, right? So remember, we discuss how the stock market is a time machine. The stock market, when everybody's happy, it compounds forward. Because if we're enthusiastic, we're thinking about hope. We got hope for the future. But what happens is when we don't have hope for the future and we want to reevaluate, it'll discount backward. All right. So that's what always happens. All right. So Nvidia, man, President Trump has decided to let Nvidia will be selling is H2. This is one of those news clips I was telling you. They'll start selling their chips in China. And the thing about it is, when they gave their last earnings report, they said, hey, look, we're just going to exclude China in that. Now they have China included and they able to sell the H200 chips. That will affect their earnings, right? It will affect their earnings. But we'll see, so many people with such a large and they have so many shares outstanding now, the stock doesn't move like it once did. But it's still a good trade. I'm in this trade and I have until March in this trade, a couple of ways in regards to dividends, in regards to options, and I hold it in my long term. And that's the strategy that I always do, that I always preach, the first fruit strategy, right? But the conclusion was that those chips will have some type of tracking um, mechanism in the chips to make sure that they go where they're supposed to go. So we'll see that. But I think it's a boon. It's positive. It's at the right time to have some positive news with Nvidia. But it wasn't really affected in the market today, and I'll show you. All right. So the market today, man, we were up 500 points, right? Positive report. I mean, 90% chance I'm gonna take that bet all day, right? And I'm gonna position myself, and I've been positioning myself. Like I said, we're at the end of the year. We're at a time where if news comes out, I'm sure that it will be spent positively. All right. We're going to go into the Christmas time. People are more optimistic. People are happier during this time. And people will make more positive decisions, right? It's an environment thing, right? The stock market is about environment and expectations, right? During Christmas time, usually positive expectations are there. That's why we want to have a positive, we will have a positive, and we want to position ourselves positively. So we don't want to be scared and not in the market, right? And I'm gonna show you one of my trades, and I'm gonna show you what I'm waiting on. Man, I hit on this one 258%, right? 174% gain. That means I was down, right? It means I was down. So, but from the bottom to where it closed today, I paid $5.43, which is multiplied when you buy options, multiply times 100. So $500, $543 per contract, right? That was the gain. And man, this paid out really well for me. So that worked out. But as this is a positive, I got to show you the negative because options don't always work out. And not saying that these aren't going to work out, but right now they haven't worked out like GEVernova. All right. So this is my portfolio. I mean, this is my performance up to the year to date. Man, we were on the way to 300%. Man, I was like, man, we're gonna hit 300. And then November came. But I was up, and that's what happens. And when you're greedy, I wasn't really greedy. I just felt that like I think we'll be okay and we'll go through some turbulence. But I should have known because we didn't really have a hard September that we have to make up that reset. So which that reset in the market happened in November. Stocks fell maybe about 5 to 8%, I think, and so that this chart is resemble that, right? So we were in November, we were up, we were headed to 3, and then we got hit, but we're fighting back, right? We're fighting back. And that's what the market is, especially if you want to trade in options, you have to know how to fight back, right? So I showed you the GE. So let me show you the ones that I have, that few that are down. Man, Tesla, even though we're up today 12%, man, we were down 54%. Amazon down 52%. And Nvidia down 57% on these options. I'm getting my butt kicked. in these. But let me just show you, just like GEVernova, let me just tell you where we came from. I want you to look at this, right? Even though we closed at 21, right? I closed out at 21, on this trade, but we fought from all the way from below $5. All right. So what happens is you just got to stay in there. And these other trades, I got time. They don't expire till March. So it's plenty of time. And we hope that we're going to catch a bid during this Christmas rally time, right? Until the beginning of the year. And then I'll probably close out these trades. And even if I close out just barely, break even, I think I'll be happy because I knew better getting back in these trades. I was up on just about all of my trades, right? But I decided to stay in there. I should have got it. So once GEVernova hit today, cut, bye, see you later. Got my money and put it in my account, right? And that's where we are with that. And that was a nice return for me. So look, guys, the market is here for us. It's for the average person to become fruitful in their finances, right? And it's like I said, as long as we have a sound mind and we decide to take on good information and input, and even if you don't want to get all the information, hey, join the club. My club is closed right now, but I will be opening it back up, and just keep watching me, and we'll continue to move forward. Man, thank you guys so much. Look, great time, to find there's some deals out there right now, okay? And you want to catch that win 79% of the time. That does mean 20% of the time we could not have a Christmas rally. It's unlikely, right? So sometimes you have to play the odds, right? 80%, 20%, 80-20, right? So, but I'm gonna play the odds, especially with those other trades, and I'll keep you posted on where we are with those trades, and we continue to move forward. Man, hey, I wish you guys a fruitful rest of the week. And my son has me coaching basketball. I was surprised how much he has improved. And I think we have a good team. I think we have positive. I think we could do well in our league. But man, that's what it's all about. Investing, spending time with our families, having sound mind and sound judgment, and making sure all aspects of our lives are positive. Right? My goal is always to become a better dad, a better husband, a better investor, right? And it all takes work, right? But it's expected from us, right? And what else are we going to do while we're here, right? And I enjoy every aspect of these. So, guys, until next time, man, please be careful and be fruitful. Until next time.
The market is volatile, the stocks keep going down, then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.